Okay. Ooh. Cool. Can I see it?
Yeah. Oh, I'm not gonna visit.
And like this.
Like you wrote it just right at the perfect height. I can see it over my head. Do you have these for up to be able to? Okay.
You want it on now?
You tell us.
Huh?
You tell us.
Yeah.
Tell
Well, I
us
was
the word.
assuming you want to do like a
Do an intro.
hello. And
Yeah, let's do that.
we have 4 on that.
Give it a couple more minutes, see if anybody else comes on.
All right, we're gonna give it a couple more minutes.
I was gonna say, yeah.
Crystal's whispering to Paul, but we're actually talking to you. So
Yeah,
give it a
sorry,
couple more minutes for people who want to join, and then we'll go from there.
I'm clearly just an in-person teacher.
Yes. it's really challenging.
I'm versatile.
I'm usually just on the
Paul is laughing,
other side.
and I'm looking at myself. I'm not even looking up at the camera, so it's whatever.
And you can kind of see what's on the board, but kind of can't. So
Cool.
just say it out loud too.
Close the blinds, maybe I'll take that glare off.
It could. Hold on. Make it gloomy.
Yes.
Just close like those first two. That one and then the one, yeah, that one. And then one more that way. No, the other way.
Other way.
Doesn't listen very well. That one.
Recording for the Zoom, go over e-sheets
Come join us.
You're not just recording for Zoom.
and Amy. All right, are you ready?
Yeah, ready. Ready to rock and roll. Hi, I'm Crystal Woods with Tampa Bay Title.
And I'm Jake Kegler with VanDyk Mortgage.
We are here to present the Ulta settlement statement and closing disclosure. We're also going to give you some tools on how to create net sheets.
Awesome. So I think first we should probably go over the closing disclosure. So
You want to share it?
Yes. please.
yeah, you're gonna see it. We're gonna do a screen share of it, and I'm gonna go through with the main portions that you probably need to look out for. And more knowledge is better. So, all right, are we up on there?
And clicking. All right. thank you.
Good.
I'm clicking. Ooh, it's slow.
Yeah.
Maybe.
I click on it.
All right, so what we'll probably do, unless he can't get it going, or we just keep moving, is if he can't get the screen share up, we'll email you all a copy of this. I think it's actually working. A copy of this CD and the ALTA statement that Crystal's going to go over. We have 2 people here. But yeah, so we're going to start with the top. It's basically going to give you all the information, specifically if it's a finance deal, of the loan and the parties involved. So you're going to have your sales price up here at the very top. It's also going to talk about the term of the loan and the type of loan that it is. So loan type will be, it's just an X, conventional FHA, VA. There can be other things written in. Under loan terms, it's going to talk about the loan amount, the interest rate of the loan, the monthly principal and interest. Whether there's a prepayment penalty or not, that's going to be kind of rare nowadays, but they happen. And a balloon payment also kind of rare, but could happen too. Projected payments. So this is the principal and interest. That gives you what the principal and interest fee would be. And your estimated escrow, assuming that they are escrowing for taxes and insurance and that sort of thing. And then your estimated total monthly payment. The principal and interest cannot change over the life of the loan, but the estimated escrow can change. So taxes go up and down, insurances go up and down, all that stuff. So your estimated taxes, insurance, and assessment, that is your escrow. And that's about the $958 amount that you see right there is for the taxes, insurance, possibly mortgage insurance. That's going to be included in this monthly payment. The most important part that you're probably going to be looking at with your buyers is the closing cost and the cash to close. So the closing cost is how much it costs to close the loan. The cash to close is the closing cost plus the down payment. So your total cash out of pocket would be your cash to close. Page 2, whole lot of fun.
Good stuff to know.
On page 2, loan costs, it's going to be different for if you use a different mortgage company. If you use a broker, it's going to look different. But in the A section, this is the origination fees. So this is not a VanDyk thing. So at Waltham, this is generally points paid to close it. So this would be like a broker. You'll see it as an origination point, something like that. I mean, at VanDyk, we have a processing and underwriting fee. Sometimes there's a condo review fee. If it's a condo, totals up to about just under $1,500. So that's where that is. Services borrower did not shop for. So the bank or lender always is, not always, most of the time will require an appraisal. So that's something that the buyer's not shopping for. So it's disclosed initially. This has a credit report fee. That's a pretty common thing. That's what it costs to pull the borrower's credit, any supplements or anything else that is required.
We're sharing that.
Okay, cool. So page 2.
Please.
I think we're sharing. You're going to notice that on this, it shows things that are paid at closing and things that are paid before closing. So if it's on that side, but these are all buyer or borrower paid fees. Your flood cert, like I said, this is going to differ from lender to lender, but flood cert and a tax service fee, that would be included in there too. Services that the borrower did shop for, which
That's me. So
title.
they don't technically shop for it, but they do. So these, so it's put in this section because they're not lender fees. So in this section, you will see all the title charges. So there's going to be the settlement fee, any title policies. So there is a lender's title insurance policy that's required, and that's based off of the loan amount. There's any additional endorsements, which is add-ons to that loan policy that the lender requires. You'll see those plus the settlement fee and e-recording for Tampa Bay Title. Other title companies might put it in different or name it differently. However, this is where your survey fee, any fees that the title company is charging will essentially reflect in section C.
And then in D is just an overview of all of these fees that we just talked about. So on to page 3, other costs. So here's where we have recording costs. If you have a mortgage, there's always going to be recording costs, even if you don't have a mortgage, because you have to record a deed. So this is the recording cost for the mortgage and the deed on here, in this specific case, your prepaids. So when you close on a loan, your mortgage insurance, so this is a $3,750. That is the annual premium for the mortgage insurance. So we're collecting that for 1 year. And then you also are collecting the prepaid interest, which is from you're gonna have to talk about prepaid interest because we don't calculate it, but basically it's from the day that it closes until the end of the month, so that we're making up for the difference, so that when you make your first payment, it's even.
So essentially the prepaid interest is accounted for that first payment. That's why there's usually at least a 30-day gap between the official first payment. The first official payment is collected through the prepaid interest.
So now we get into the fun topic of escrow and how that works. So in Florida, property taxes are due in November. So, well, we're talking about homeowners insurance first. in order to get even, because your first payment is not going, so let's say we close in December, our first payment's not going to be until February 1st. Because we're skipping a month. It's not that you didn't make a payment, but we collected it here.
Yeah, so your January, if you're closing in December, your January payment has already been accounted for in this closing.
So then we're going into the first payment would be February. So what we're doing with an escrow account is an escrow account basically is paying for your taxes and your insurance so that you don't have to worry about it. You're going to get a bill. Don't pay the bill. It's going to be like a savings account you never wanted because they're going to hold it for months and then they're going to try to refund it to you anyway. So, but what this does is allows us to pay it so that your mortgage company or your servicer pays it instead of you having to worry about it. So we're collecting monthly for these things. So that's why it says in G, homeowner's insurance, $312 per month. So that is on under F on 1, $37.50 divided by 12 is $312 a month. And we are collecting 3 months so that we have a little bit of a cushion and that when it comes time for renewal in a year, we're paying outright. We have enough in there so that you're not in a shortage and we're paying your insurance company.
And the reason why it's 3 months is because your first month that we are collecting an interest for January, we have to collect for a January prepaid of insurance and taxes. So that January's there, and then escrow accounts are always required to have at least 2 months of those prepaids in there at all times for that cushion.
Then your property taxes. So property taxes in Florida are paid in arrears. So you're going to end up paying for the time going forward until November when they're due, November 1st. And then you're going to get a seller credit, which we will also see in here for the time that they've lived in it.
And that's from January to November is where you get a credit from the seller for the time they've owned. November to December, the buyers now credit because the sellers are required to pay that tax bill because it's due now.
Cool. That gets confusing. And then you have an aggregate adjustment, which is basically leveling out the escrow account and making it everything copacetic so that we're not carrying too much in there. We're not carrying too little. So the aggregate adjustment. So in H, these are other fees. So this is going to be your HOAs, commissions,
any additional fees that don't fall in the above category. So if it's not a technical lender, yeah. So you'll see survey fees down here. We keep them in section C because title orders it most of the time. So if it's not a title order one, you'll see it list somewhere else. If there's payments we're remitting out, so say, for your debt to income ratio, your lender requires you to pay off a credit card, or your client to pay off a credit card, it would reflect in that section as well.
And then kind of a typical thing is you're going to see in this section, most of it is going to be a seller paid fee. Sellers in Florida are covering commissions.
The owner's title insurance.
Owner's title policy, all that stuff. So then we go down to J, where it's basically a subtotal of all of that stuff. And we're going from there. Okay. This is always an interesting one from our perspective. So when we are doing a mortgage, we're required to disclose upfront on a loan estimate what the fees are. And if some of these fees, so like the origination fees, stuff like that, so they change, we're required to redisclose them. So when we're going through a whole process, you're going to see on page 3, it says loan estimate, and it gives you the total closing costs. And then it lists all of the stuff from down. Ideally, how this works is from the loan estimate to the final, these numbers go down. If they change, we have to redisclose it, which we would have done throughout the process. But either way, it's a good thing to just take a look and see how they've changed over. Generally, they go down. Sometimes they go up. The adjustments and credit going to come from title and stuff, but it's going to generally adjust for your tax prorations, stuff like that. So
any HOA fees that weren't disclosed because we don't have that information usually at the beginning of the process. So you won't necessarily see those fees listed until you get the final. That's why there's a difference between the loan estimate to the final.
Well, you'll see escrow or deposits, escrow payments, all of that will be there. And it's good to see how they change from the beginning to the end. So, and then basically we're kind of going through everything, but in the summaries section, which kind of mimics our ALTA statement.
Yes. So the summaries is basically just a recap of everything and it totals all the numbers. So anything that are paid in advance, anything that is still due, that's where these summaries come into play.
I mean, kind of a quick way to judge it would be to look at the property sales price versus the loan amount. So we know that the down payment's gonna be what, 150,000 in this case? Yes, that would be your down payment. And then it has a seller paid closing cost. That's also where you're gonna see that. So all of this totaled up to cash to close from the buyer at the very bottom. That's the 156,757 number. That's what they have to wire to the title company to close.
Where did that?
Page 4,
Page
3.
3.
See at the bottom?
I don't see what you just said. You have the same sheet as this.
Do we?
It says 159, 443.30.
So it's a little different, but either way, that bottom line is what you're gonna have to wire to
Oh,
title,
Lord have mercy.
unless I'm dyslexic.
No, I don't know why. This one matches. It's all me,
She
my
printed
bad,
these
my
either
bad.
way.
We might need to re-record this.
Either way, what you're looking at is your cash to close at the bottom. That's what you're gonna be required to wire to the title company, or your buyer will be. Page 4 is additional information about this loan. This goes through the ins and outs. Any non-conforming loan is gonna be a little bit different on this page. You're not gonna see too much neg-am loans. She got the right
I
one.
got the right one.
You're
I didn't
not,
have the wrong one.
It's basically disclosing that you have an escrow account, how much that costs, and then, over the course of time. Your loan calculations, it also gives you some useful, definitions of stuff that they've probably heard over and over again, that they might not know what that means. A lot of people think that their APR is their interest rate. It's not. Your interest rate is disclosed at the very front of this. Your APR is the amount of finance charges over the life of the loan. Contact information. This is going to list all of the parties that were involved in the transaction. So if the lender would be, your lender information would be here. Your listing and sellers, or buyers and listing agent is going to be on here, and your settlement agent. So all of those, this is going to be something that the customer is going to go home with. If they have any questions, they're going to have all the people here that they can reach out to if they have any questions. Generally, you're going to want to talk to title at that point. So yeah, then they just confirm receipt. In a finance deal, they're going to have seen this closing disclosure 3 to 4 times before they actually close. Just so everyone's kind of on the same page. But yeah, that's the disclosing disclosure in a
Quick nutshell.
quick nutshell.
So I will go over the Ulta settlement statement. So when we are preparing the closing disclosure, what we're doing is we're going back and forth with the lending side to make sure that all the numbers match, they're cohesive, they're what the customer were expecting. We make sure that all, any fees that need to be accounted for are listed on these documents. So what we do is after we've finalized the closing disclosure, we generate the Ulta settlement statement, which is what we send out to you as the agents. We send this out to your customers, both seller and buy side. Everybody is to review it to make sure it looks good. So on the settlement statement, all the numbers are almost exactly the same. This is a simpler format of the closing disclosure. Closing disclosure is regulated by the state to make sure that the customer is fully aware of all the actual cost. So as you go through, you have your sales price, your assessments, your CDD reimbursements. CDDs are paid on the taxes, so those are credited back because they are paid in future bills versus arrears like the typical taxes. Then you have county tax prorations that we calculate based off the tax bills, any closing fees, any title insurance, that's all listed on here. So literally everything that is on the closing disclosure is listed on here, just a different format. The biggest difference on this is we tell the customers what the actual title insurance premiums are versus what they reflect on the closing disclosure. The closing disclosure tells the clients, basically the buyer has to be told what the full loan premium would be before a simultaneous issue of the owner's policy together. So simultaneous of 2 policies together gives a discount to the buyer. So on the settlement statement, page 2 of 3, on the left column, you'll see seller side dropping down to the $1,025. That's the title insurance premium for the owner's policy. Opposite side, up a couple, it shows $1,850 for $1,825 for the title insurance for the loan. So that would be less because there's going to be a credit to the buyer Our fee is $295. Other title companies charge different fees for that. So this shows the difference of what those premiums would be. And then everything else is exactly the same as the closing disclosure. So when you go to your final page, I'm zipping through because we already talked about what everything is. So on the final page, you have your seller's final amounts and you have your buyer's final amounts. Now there are 5 different figures on this sheet. So you have your seller debit and credit. So the debit is how much in closing costs they have to come forward with out of the sales price. The due to seller is how much they are netting from this sale. And then the final is the total. So you take your debits plus the amount they're receiving is how much it's debiting from the title company to equal that full sales price plus any credits they're receiving. That's why the subtotals match on both sides, because the debits and credits all total out. Same thing on the buyer side. So you have subtotal under debit. That's how much they owe. Credits is how much is paid in already on their behalf. So their deposit, any seller credits, any tax expiration credits, loan amount, list all there. You have this due from buyer is the difference from the sales price plus any debits that are due, gives what they need to bring to closing. So that's where you have the 159, 443.30. Subtotal it all up equals 517, 772.20. So that is a reiteration of the settlement statement. So when you're looking at this, the settlement statement with your clients, you're going to look at that middle number. So the 159, the due from borrower or due to seller is what they are looking for.
Your Ulta statement is going to be, for anyone that's been in the industry or closing a house prior to 2015, 16. Either way, the HUD, the old school HUD, the government decided that the closing disclosure was actually easier to read, but it's not. Anyway, they're basically mimicking each other. There's just 2 different ways of seeing it. But the information is going to be the same, it's just presented in a different way.
And the other reason why we issue the Ulta settlement statement is because the closing disclosure has the customer's loan number on it. We don't need to give that out to everybody, but our agents all need to have a copy of the settlement statement for compliance. Insurance companies needed to show proof of the sale and proof of purchase. Homeowners associations, they need proof of it as well. So there's a lot of parties that will get a version of the closing disclosure. So instead of giving out the loan number and all the information within their terms that just is not public information, we issue the Ulta settlement statement and give this one out to all parties that are not the borrower.
Now, as said, this is going to vary from between title company and it's going to vary between mortgage company lenders. So it's all going to be a little bit different, but we'll be happy to help you. I mean, this is kind of just a rough crash course in reading fee sheets. But Crystal has some tools.
I have some fun stuff. So I'm pretty sure most of you on Zoom aren't going to be able to see this. We did our best. So I have a website and I will ask Paul to put it in the chat for everyone so that way you can see it. And anyone who needs this after the fact, just get with me and I'll make sure that you have a copy of it. So we have a website. You're zooming. Okay. So we're trying. We have the website is fanagentapp.com. That is a web version. So you can go on your web browser, type that in. It's going to bring up our fee sheet calculator. This will for seller, buyer sheets. It's all the same. So what it does though, is it's going to pull up Tampa Bay titles fees, or if you're using Hillsborough title fees, it's going to pull up any of our Florida Agency Network brands. These are our fees. So if you have a buyer whose title company is not Fan, the fees may be different, but this will give you a general idea of what you're looking at. So you go on there, you do it on the website. Do not download the web version, just use the website. If you download the web version to your desktop, it will not update as normal. You have to manually update it. So I always recommend just hop into your Google or whatever you use for your web browser and just type that in, save it to your favorites. Always just use that. You can save all of your net sheets in that app. The other one is an actual app you can download. It's Fan Agent One. Fan Agent is one word, and then the word one is separate. You download that in your app store, and that will be on your phone, your tablet, whatever you're using, and it's available in the field. So you go to a listing appointment or a buyer's consult, and they're like, well, this is what I want to purchase. This is what I want to net. You have all those tools directly with there. And I offer one-on-one training on the Fan Agent app. It's very easy. There's a lot of tricks and tools. There's a free version, and you can also pay $9.99 a year, and you can get the premium where you can create and design your own sheets. Very customized. You can put your logo on there, your photo, anything you want. You can pull different areas. You can give school information, zoning, what's around the property. It'll tell you where there's the nearest Starbucks, things like that. So if you want one-on-one training, just get with me and I will be more than happy to provide any information and additional information on this for you.
How do they find you?
You find me in the office. I am 2 offices to the left of Kim, or you can call me or text me at any time, or you can email me and we can schedule an appointment.
I don't have any fun apps, but you can come see me and we can talk about it.
Yeah,
What's your email?
my email address
You
is,
should write.
write it above
What is
it.
it? See what?
CRY, crystal.woods at tampabaytitle.com.
Okay, that's a lot.
Yeah, it is.
Okay.
And my cell phone number,
Okay.
727 580 4590. Call, text, email, any questions you have. If you receive one of these documents and you have questions on them and you can't get in touch with your title or your loan officer, call me or Jake. We'll be more than happy to review it with you. We want to make sure that you understand, but at the same time, it's also not your responsibilities to know these. We would just want you to be familiar with them. So that way, if a customer comes to you and
You
says,
can
what is
talk about
this? Then you can have a general answer. You can also send your customers our way as well. And we're more than happy to answer at any time.
I'm writing my information up there. If you ever have any questions or needs, I will be here.
Jake's here more than I am. I have lots of offices I cover, but texting, calling, I will answer always.
It's sideways, but my number is 727-688-9219.
Slow.
727-688-9219. I'm here. We're happy to help with whatever, if you guys have any questions or anything. But it's always helpful to be able to read these and know what you're talking about when you have these questions. So.
Questions on Zoom?
Any
Any-
questions on Zoom? Any questions from our digital attendees today?
Kenny Rogers and Dolly Parton are still here. For a little while.
What are we teaching? Just so I know, if I have a question, please.
The
Fee sheets.
fee sheets. We went over the ALTA and the CD, so that way there's a little more knowledge.
Do we want to do like a quick, so like the quick synopsis, you probably want to look at your buyer's agent is the amount of money that they have to bring to closing. Because that's probably what they're gonna ask.
And for a
Your lender
seller,
should be communicating this. They might not all lenders are created equal, so. Also, if you have a transaction coordinator or you're charging like an admin fee or something, that's gonna be listed in the others.
the section H.
So you want to make sure that that's being collected, to cover yourself, and then you're also gonna want to look at your commission to make sure all that's correct. Based off of what you know. And on the closing disclosure, that's all gonna be in letter
Section
H.
And so if the client asks, what are my estimated closing costs? Can we use that app to do that?
Yes, by plugging in the app, you can actually pull up the property address. There's a section where you list your property address in our app. It will pull up if there's any outstanding mortgages, it'll give an estimate. Unless your customer knows, like I owe 163,000. If they don't know off the top of their head, our app will pull an estimate based off the time frame that they purchased to the time frame that you're estimating the closing out to be. And it'll give you an estimate of what the average interest rate was at the time that they took out that loan. So you can give an overestimate on that. And yes, if you do a buyer's estimate, it will pull in an estimated lender's cost as well, which is not always accurate, but sometimes it's nice to just give a worst case scenario. We always go a little bit higher. Same for a loan estimate. They're always a little bit higher. So that way there's no shock. There's no payment shock, ticket shock. This is not what I thought I was gonna do, so.
We'd rather you be happy and you're not bringing as much as you thought you were.
Exactly.
Than bringing more.
Exactly.
So you can do both buyer and seller estimates on.
Yes, there's also comparison.
And yeah, a lot of people also like to give you a percentage of how much of the purchase price is gonna be paid and that's gonna equal your closing costs. And there's really not a way to do that because a $200,000 house is going to be, a higher percentage in closing costs than it necessarily would on a $500,000 house. So just, people like to have a quick thing to say and just estimate it, but there's really, that's a slippery slope. I wouldn't recommend it.
Yes, I will email out the handouts. I will make sure that I get a name of all who's on the Zoom and I will email these out to everyone.
Any in-person questions? Debbie's talking to herself.
I know, I'm like thinking through all this. I do use your app and it is very handy and it does overestimate, so we always look good because we can.
Yes, our app is pretty close. I've had people come in within a couple $100. Usually it's a couple $100 over what the clients were expecting to get for seller app. Most of the time it's the seller net sheets that are being used. So the sellers will be told that they're going to receive like $200 less, they get $200 more, and they're happy. We are pretty close. And especially if you plug in the property address, it'll pull the taxes. And always use the estimate. When you go to finalize, it'll ask you, do you want to use an estimate, which is a higher amount, or do you want to use the current years? I always select the current year because you don't want to go too high and then for buyer sheets, make them think that they're going to be paying more when they're not. Because we base everything off of the most recent issued tax bill until August, when the trim notices are being issued out.
But then we're going down slippery slope.
Yeah, we're not going down that. So that's title. So we're gonna stay in our lane.
From a lender perspective, if they remove homestead exemption. And so when you're looking at your property appraiser's website and there's a big red no, meaning that they've removed their homestead exemption within that calendar year, but it hasn't transferred hands, then we have to use the estimator on the county website, which is generally about 10% high. But you'd rather, it's a double-edged sword. Would you rather know that you're going to be short in your escrows and your payment's going to go up X amount, like $300 a month? Or, would we rather just collect this and you have a little bit of an overage and you be prepared instead of having this, all of a sudden your tax bill comes out and you have this giant increase in taxes. So that's what we look for up front, so I can have the conversation with the agent. And then also, the agent wants me to have the conversation with the buyer. We talk to the buyer too, but
there's so many different aspects that go into creating this. And that's our jobs. That's our jobs to know this. It's our jobs to make you guys look good. So that's what we do. So
Have this so many days ahead of time, right?
exactly. It's ideal to have it. The regulations were set that the closing disclosures have to be issued to the customer a minimum of 3 business days before closing. That isn't always the rule of thumb anymore. There are tricks that have been able to pull in place to where that last 3 days doesn't count anymore, but title and lending, your 2 partners here, we do everything we can to get those out as soon as possible. Right. Questions? Anyone else? That's it. Any other questions?
like we said, if you guys have any questions or anything, you can come and find us or text us, call us, whatever. Numbers are up there, but we're happy to help, even if it's not ours, as everyone can attest.
Yes.
And yes, you guys succeed, we succeed. So let's figure it out. Happy to help.
Yes, always.
Thank you, guys.
You're
You're
welcome.
welcome.